I didn't blow up my trading account in one day. No, that would have been merciful. It happened slowly, like rust spreading in silence, like a leak beneath the floorboards. First, it was a small loss, then another, then a week of red that I told myself was just market noise. But deep down, I knew. I was lying. I wasn't trading. I was reacting, chasing, clicking. I told myself more indicators would give me clarity, that some new YouTube strategy might finally crack the code. I had 3 monitors, RSI, Mastas, Bollinger Bands blinking like Christmas lights, a 12-tab spreadsheet tracking trades I didn't even understand. What I didn't have was confidence, or clarity, or a damn clue. Then it happened. One night, 2:14 a.m. I clicked buy because a candlestick looked like one I saw on TikTok. The trade dropped like a stone. My heart dropped faster. I closed the position, wiped my face, leaned back, and in the black glass of my screen, I saw something worse than a red candle. I saw myself, pale, hollow-eyed, pretending to be a traitor. In that moment, something cracked. Not in the chart, in me. The market wasn't beating me. I was losing to myself. Every failed trade was just me fighting shadows of who I thought I should be. Everything changed when I stopped asking, what's the best setup? And started asking, why do I keep sabotaging myself? I stopped chasing tools. I started studying the one thing no one ever told me to look at, myself. That's when I found something strange, not a strategy, a metaphor, the mirror maze. Because that's what trading is, a hall of reflections. Every chart, every candle, every perfect setup is just a projection of your beliefs, your fear, your past losses begging to be repeated. If you can't see through the glass, you'll never escape. This video isn't for everyone. It won't show you magic indicators or 90% win rate promises. It shows you truth, the kind that cracks illusions, that forces you to look at the ugliest part of your trading habits and finally stop repeating them. If that scares you, click away. But if something deep inside just whispered, it's time, then keep watching. Welcome to Trading Psychology Stick. This isn't another trading channel. This is where illusions go to die, where indicators fall silent, and the mirror starts speaking. We don't teach you how to win. We teach you why you lose. Every trade you take is your responsibility, just like every shot belongs to the sniper who pulled the trigger. Because once you see the mirror, disclaimer, this content is for educational and entertainment purposes only. It is not financial advice, and nothing here should be considered a trading recommendation. You can't unsee it, and you might never trade the same way again. Section 2. The language of light and shadow. The market doesn't speak in certainty. It whispers in flickers, flashes of light, and sudden darkness. Every candlestick on your chart is not just data. It's emotion frozen in time. A moment when thousands of humans clicked buy or sell, not because of logic, but because of fear, greed, hope, or panic. You look at a chart and see patterns. What you're really looking at is a battlefield. Candles are the scars left behind by psychological war. The bodies don't show, but the shadows do. A green candle doesn't mean confidence. A red candle doesn't mean fear. They're just reflections. The wick at the top, that's hesitation. The long tail at the bottom, that's regret. Every candle tells a story, but most traders only look at the headline. They don't read between the shadows. They miss the traps hidden in the wick, tucked in the timing, buried in the sequence. There was a time I treated candlestick patterns like gospel, hammer, shooting star, morning doji. I memorized all of them, convinced they were secret passwords into the market's vault. My perfect textbook entries reversed hard, over and over again. One day it hit me. I was memorizing symbols, not interpreting behavior. Here's what matters. Not what the candle looks like, but what happened before it formed and what it means in context. One trader's bullish engulfing is another's last breath before collapse. You want to read price? Stop thinking like a pattern hunter. Start thinking like an interrogator. Ask, who bought this candle? Who got trapped? Who's desperate to get out? The market is not a puzzle to solve. It's a mood to feel. When you learn to read the mood, the candle becomes a clue. You start seeing indecision, momentum, trap, reversal, continuation. You stop trading the color of the candle and start trading the psychology inside it. Price action doesn't predict. It reveals. It doesn't shout. It nudges. It doesn't lie, but it will expose your illusions. When you force meaning onto a chart, you're projecting. When you learn to read what's already there, you align. Suddenly, You don't need 6 indicators. You don't need Twitter signals. You just need presence. You look at the candle and you feel it. Not because it's magic, but because you've trained your eye to see the emotion behind the movement. Once you see the candle as a mirror, you start to see yourself. But this is just the first reflection. If you think candles are deceptive, wait until you meet the tools that promise to simplify everything and end up clouding your vision even more. Section 3. The seduction of shiny tools. You thought you needed them. The MACD, the RSI, the stochastic oscillator blinking in perfect harmony. They look so intelligent, so mathematical, so trustworthy. Surely, if the indicator crossed at just the right level, the market would obey. Here's what they don't tell you. Most indicators are nothing more than makeup on a corpse, lagging, late, glossy filters covering up raw price reality. They're crutches dressed as solutions, and the more you lean on them, the more unstable your trading becomes. I remember when I first discovered indicators. It felt like unlocking a secret language. I stacked them. Volume, EMA, divergence, trend lines. My chart looked like a Christmas tree of false confidence. One day, I had 7 trades open, all confirmed by indicators, and I still had no conviction. That night, 5 trades hit stop loss. 1 broke even. The last one I closed manually in fear. What killed me wasn't the market. It was the noise I chose to trust. Indicators summarize the past with a delay. You're watching footprints, not footsteps. Reflections, not reality. Imagine driving by, only looking in your rearview mirror. That's how most traders use indicators, trying to steer forward while staring backward. The seduction is real because indicators feel smart. They give structure. They make you feel in control. Often they're just illusions dressed in certainty. And here's the real danger. They become excuses. You don't follow your instincts because the MACD didn't confirm. You don't take a clean setup because the RSI wasn't oversold. Little by little, your edge dulls. You forget how to read the market because you outsourced your intuition to a script. One of the most painful lessons I learned was this. Confidence doesn't come from the tools you use. It comes from how well you understand what they're hiding. Once I stripped my chart bare, no indicators, no signals, just candles. I felt blind at first. Then I started to see. I saw manipulation in the wicks, momentum in the bodies, indecision in the tails. The noise was gone, and with it, the fear. You can still use tools, but only after you've trained your naked eye. Learn to read the raw data first. Price, volume, structure. Then, if a tool aligns, it's a bonus, not a crutch. The market rewards clarity, not complexity. When you finally stop looking for perfect confirmation, you start finding true conviction. That clarity becomes even more crucial when you begin to hear the echoes. Because some zones aren't just price levels, they're graves. And if you don't recognize the emotional ghosts trapped inside them, they'll haunt your trades forever. Section 4. The echoes in the walls. Support and resistance. You're told to draw them as clean lines, horizontal, neat, logical. They aren't lines at all. They're echoes. The lingering cries of traders who entered too high, exited too late, and got trapped in regret. You see a bounce. The market sees trauma. You see a breakout. The market sees a second chance for someone desperate to get out, even. Every level you draw is not a prediction. It's a memory. The market doesn't just move through price. It moves through collective pain. Picture a battlefield. You weren't there when the bullets flew, but the blood is still on the ground. That's what happens at key levels. When price returns, it doesn't see structure. It feels tension. Traders who bought too high, now praying to break even. Traders who missed the move, ready to jump in too late. Traders who shorted, gripping their stops like a lifeline. When all those emotions converge at the same level, volatility erupts. I remember drawing the perfect zone. 3 bounces, textbook resistance. The price hit the line again, wicked through, and I shorted hard. For a moment, it worked. Then the candle snapped upward like a whip. I was liquidated in seconds. I thought I'd been tricked. The truth was simpler. I never understood what that level meant. It wasn't resistance anymore. It was pressure. Pressure that had built for weeks. And pressure always finds a way to release. You don't trade lines. You trade emotion clusters. Every touch, every retest, every breakout attempt signals not just price, but pain. Ask yourself, who is stuck here? Who is about to panic? Who sees hope? That's how levels move. Not because of geometry, but because of psychology. Sometimes the strongest levels don't look clean. They're messy, choppy, inconsistent. Why? Because emotion is never neat. When you learn to feel the tension, not just draw it, you'll start anticipating where the crowd is weakest and where smart money strikes hardest. Support and resistance are not geography. They're history. If you don't study that history, you'll keep stepping on emotional landmines disguised as entry zones. Even these echoes only whisper. The real trap lies in something even more deceptive. A desire so deep, it feels rational. A need that ruins more traders than bad entries ever will. And it begins with 4 deadly words. I think it will. Section 5. The dangerous desire to be right. I think it will go up. That sentence has drained more trading accounts than any flash crash in history. It sounds innocent, harmless, even hopeful. Underneath those 6 syllables lives a silent killer, the need to be right. The most expensive addiction in trading isn't leverage, it's ego. And ego doesn't want to observe the market. It wants to predict it, control it, bend it to its will. The market doesn't care what you think. It never has, it never will. I once built a plan with surgical precision. Multi-time frame confluence, divergent support, candlestick confirmation. It had everything except flexibility. When price broke structure and invalidated the setup, I didn't flinch. I couldn't. I was too invested in the narrative. This has to work, I thought, so I held and held. Until the loss was so brutal, I didn't close the trade. I closed the platform. That wasn't a bad plan. That was a bad attachment. I wasn't responding to the market. I was defending my identity. Traders die not by lack of knowledge, but by refusal to adapt. Want to be a trader? Kill the need to be right. Trade what you see, not what you hope. If the chart changes, your mind must too. The best traders aren't clairvoyants. They're chameleons. They move with the market, not ahead of it. They don't forecast. They observe. They don't marry trades. They date them with tight stops and tighter discipline. Here's the irony. The more you let go of needing to be right, the more often you actually will be. Now you're listening. You're present. You're responding to what is, not what your ego demands. Ego doesn't go down without a fight. It disguises itself as conviction. It wears the mask of, I trust my analysis. Real trust isn't stubborn. It's responsive, flexible, alert. The market doesn't punish the wrong plan. It punishes the refusal to adjust. It punishes the trader who needs to be right more than they need to protect capital. The longer you trade, the more you'll learn. Being wrong is cheap. Staying wrong is fatal. Ask yourself, do you want to be right or do you want to last? Just when you think you've mastered the mental game, the market throws you a new trick, one that doesn't live in your head, but in the shadows of your screen. It doesn't show up in analysis. It shows up in the candle that looks almost perfect until it snaps back and takes your stop with surgical cruelty. The deeper truth, you were never its target. You were just caught in the trap it set for someone else. Section 6, the trap behind the glass. It looks like a breakout, clean, sharp. The kind of candle that makes your heart skip and your cursor hover over the buy button. Then comes the snap, the reversal, the wick. The cold stab of regret as your stop loss gets sliced open. Welcome to the trap. Not just any trap. This is the kind set behind glass. Elegant, deceptive, deadly. Wicks are often misunderstood. Traders call them noise, randomness, market friction. That's a lie we tell ourselves to avoid the truth. Wicks are weapons. They're the surgical strikes of smart money, the way institutions test liquidity, the way the market manipulates emotion. A long wick doesn't just represent rejection. It represents pain. It shows where traders got lured in and where they were punished for thinking they saw clarity. Picture this scene, textbook breakout. Price is consolidated. Volume starts ticking up. A large candle punches through the zone, and you're in with a perfect entry. For a few seconds it flies, then reversal. Sharp, violent. You blink, and it's back inside the range. A full fake out. Your trade, gone, liquidated, not because you were wrong, but because someone else needed your order to fill theirs. That's how the market works at scale. Big players can't just enter like retail. They need liquidity. They need emotion. They need you. So they create the illusion of movement, wait for you to chase it, and then hit reverse. That wick on the chart, it's the fingerprint of that setup. It says, here lies the retail trader who thought this time was different. You don't have to be that trader. Stop worshiping candles. Start dissecting them. A long wick on a breakout zone is not confirmation. It's a trap door. especially when it's fast, especially when it looks perfect. Perfection in the market is rarely real. It's bait. The moment you bite, you give up control. The smartest thing I ever did was pause before every breakout entry and ask, who's on the other side of this move? If the breakout is too clean, too sudden, too obvious, it's often been designed that way. The market is not random. It's strategic. It feeds on predictability. Your predictability. What's the antidote? You wait. You watch the wick. You look for the retest. You let the trap spring without you in it. Then, if price returns without panic, without manipulation, that's when you strike. Not like a chaser, but like a hunter who knows patience is the sharpest weapon. Once you see wicks not as candles, but as conversations, you'll start hearing something even quieter beneath them. A second signal, a hidden pulse, one that doesn't lie, one that doesn't flash, one that doesn't manipulate. It's not what you think. Sometimes the truth of the market isn't in the movement, it's in the pressure. And once you learn to feel it, you'll never look at volume the same way again. Section 7. The whisper that exposes the crowd. It doesn't blink, it doesn't flash, it doesn't ask for your attention. Once you notice it, you'll wonder how you ever traded without it. It's the whisper beneath the chart, the pulse behind the price. Volume. Most traders ignore volume until it's too late. They're too busy watching patterns, signals, indicators, all reactive, all surface level. Volume tells the truth. While price can deceive, volume exposes conviction. It shows who stepped in, who exited, who panicked, and who took control. If price is the actor, volume is the script. When you learn to read both, the entire market opens like a play you've already seen. I remember a setup that looked perfect. Textbook structure, clear breakout. Everyone in my Discord was buzzing. The volume, flat, silent, like a stage with no audience. I stayed out. 5 minutes later, the breakout failed hard. It was a trap, a show with no conviction. The volume had whispered the truth. No one else had listened. What most people don't understand, it's not how far price moves, it's how hard it was pushed. A candle without volume is like a gust of wind, dramatic but fleeting. When a candle moves and volume spikes, that's pressure, that's a decision, that's institutional footprints. You can see them if you're paying attention. Volume reveals divergence that no oscillator can. Imagine price making higher highs, but volume drying up. That's not a breakout, it's a slow death. Or a sharp move down, followed by a candle of indecision and a massive volume spike. That's not confusion, that's absorption. That's a market preparing to reverse while everyone else is frozen. Volume is where smart money leaves fingerprints. They can't hide them, even with algorithms, even with spoofing. Eventually, the size must show. When it does, you'll see the imbalance between buyers and sellers like X-ray vision through the candle. Here's the secret most will never tell you. Volume isn't just about spikes, it's about silence. Low volume at key levels often means the big players are waiting, watching, letting retail burn themselves out before stepping in. When they do it quietly, not with drama, with force. Next time you're about to enter a trade, pause, ask, is this move supported by pressure or just price? If the volume doesn't align, step back. When volume and price disagree, price usually folds first. Reading volume takes practice. It's not sexy, it's not flashy, it's intuitive. Once it clicks, you won't just see entries, you'll sense intent. You'll know when the market is moving because it wants to, and when it's moving because it wants to trick you. Even volume, for all its honesty, can't save you if the real threat isn't on the chart. The next move doesn't come from price action. It comes from within. The flash doesn't happen on the screen. It happens in your chest, in your breath. In that second between the candle forming and your mouse clicking, that's where the real war begins. The chart isn't moving. The market's calm. Your heartbeat, racing, your breath, shallow. Your hand, already hovering over the mouse, itching to act. You're not in a trade yet, but you've already lost control. The threat isn't outside. It's not in the news or the candle or the pattern. It's in you. The real monster in trading lives in your nervous system. Fear, greed, hope, desperation. You've heard these words before, maybe even journaled about them. Have you ever truly felt how fast they hijack your body? How one red candle can trigger a childhood fear of failure? How one green candle can awaken a gambler's thrill you thought you buried? I remember entering a trade once. Clean setup, proper size. As soon as I clicked buy, my chest tightened. Not because of logic, because of memory. The last time I took this setup, I got stopped out instantly. My body remembered that pain before my brain did, so I second-guessed. I closed early, watched it hit TP without me. That wasn't a trading mistake. That was an emotional echo. Most traders obsess over entry techniques. Few study the biology of impulse. Trading is not an intellectual sport. It's an emotional battlefield. Your greatest threat isn't being wrong. It's staying reactive. That reactivity comes from a nervous system constantly on edge, constantly hunting for validation, constantly afraid to sit with discomfort. You think you're addicted to the market. What you're really addicted to is certainty. You chase setups not because they're valid, but because you can't sit in the unknown. You overtrade not because you see opportunities, but because your body can't handle stillness. You cut winners short because profit feels unfamiliar. You hold losers too long because loss feels personal. The monster isn't in the chart. It's in the moment after the signal, when silence creeps in and your mind screams, "Do something, now." That's where discipline dies. Emotions are not the enemy. Unprocessed emotions are. You can't eliminate fear. You can recognize its voice. You can't kill greed. You can see when it's driving. You don't need to be emotionless. You need to be emotionally literate. The traders who last aren't the ones who feel nothing. They're the ones who feel everything but don't flinch. How do you begin? You breathe. You create rituals before trades. You reduce size until the outcome doesn't move your heart rate. You study your reactions like you study candles. You ask, was that trade based on signal or sensation? Until you master the monster within, no strategy will save you. No risk-reward will protect you. No trading plan will survive the surge of the unregulated emotion. Just when you think you've calmed the beast, it reappears. Not during a loss, after a win, when greed whispers sweet lies, when your P&L glows green and your confidence turns to overconfidence. That's when you raise your size. That's when you break your rules. That's when you forget who you are. That's when the market reminds you, with cold precision, who's in charge. There is a way to take your power back. It doesn't start with another setup. It starts with a number, a decision, a contract with yourself that defines exactly how much of you should ever be on the line. Section 9, how much of you is on the line? Risk, such a simple word, such a devastating force. Traders talk about it like it's just numbers. 2% per trade, 1 to 3 risk reward, tight stop, wide target. Those aren't risk rules, they're masks. Real risk isn't what you write in your plan. It's what you feel when money leaves your account. It's what part of your identity you're unknowingly placing on the altar, hoping for a green candle to validate your worth. Risk, at its core, is personal. It's the mirror that shows how much you've actually evolved, or how much you're still trading from insecurity. When you size too big, it's not just aggression, it's usually compensation. For what? For fear, for proving something, for chasing an image of the trader you think you're supposed to be. I once took a trade where the setup was clean, but my size was stupid. Not mathematically, emotionally. I had just come off a string of losses and wanted to make it back. You can't recover dignity through leverage. I remember the trade moving against me just slightly, and my chest caved in. Not because I couldn't afford the loss, but because I couldn't handle the story it told me. You're still a failure. I closed it early, panicked, only to watch it reverse and hit target perfectly. That trade didn't expose my strategy. It exposed my self-worth. That's what risk really does. It reveals what you're still clinging to, what beliefs you haven't questioned, what pain you've been avoiding by hiding behind charts. Here's the hard question. How much of you is in every trade? Are you risking 2% of your capital or 80% of your emotional stability? Are you entering with clarity or with hope disguised as logic? True risk management isn't just about stop losses. It's about psychological thresholds. If losing a trade changes your mood, your size is too big. If missing a move ruins your day, your expectations are too high. If you're adjusting your plan mid-trade to give it more room, your identity is tangled in the outcome. The best traders don't just control risk. They understand what risk means. They know how to protect not just their account, but their mind. They size down until their nervous system stays neutral. They don't need every trade to win, because their identity isn't riding with their position. That's why they last. Ask yourself, what are you really betting with? Your strategy, your ego, your unhealed wounds. Risk is not just a function of your system, it's a reflection of your psychology. Once you learn to trade with less of you on the line, you gain access to something few ever find: stillness. You stop rushing. You stop forcing. You begin to wait, not with anxiety, but with power. You develop a new kind of discipline, one that doesn't click until the market deserves your entry. That's when you stumble into a strange, beautiful edge, one most traders never discover. Sometimes the most profitable move is no move at all. There is a moment, quiet, almost invisible, when the impatient lose everything and the patient begin to win. It's not marked by a signal or a spike or a confirmation candle. It's marked by restraint, the power to sit, to do nothing, to not trade. Most traders hate stillness. They call it missing opportunity. They scroll, scan, refresh, redraw, reread. They believe movement is progress, that clicking buttons equals productivity. In trading, motion is not mastery. Stillness is. I didn't learn that from a book. I learned it after burning through 5 trades in one day. Each one taken out of boredom, each one forced, each one violating my system by just a little, and each one red. That night, I stared at my trading log and realized something devastating. None of those trades came from conviction. They came from a need to feel in the game. I wasn't a trader. I was an addict looking for a dopamine drip. So, I made a decision. The next week I sat. I watched the charts for 5 days without clicking once. I felt twitchy, anxious, restless. Something strange happened. I started to see. Without the fog of needing to be in a position, I began to recognize quality. Clean structure, real momentum, trap zones. It was like switching from static to signal. When I finally took that one trade, just one, it worked. Not because it was magic, because I had waited. I wasn't chasing, I wasn't proving, I was aligned. That one trade wiped out all 5 of my impulsive losses from the week before. The market doesn't reward constant action. It rewards selective aggression. That requires patience so sharp, it feels like power. You sit not because you're scared, but because you're hunting. You don't rush into noise. You wait for silence to break. You don't guess. You stalk. Stillness is not inaction. It's preparation. It's when you let the market reveal itself instead of projecting onto it. It's when you stop asking, "Can I trade this?" and start asking, "Does this setup deserve my risk?" Most of your worst trades didn't come from bad strategy. They came from emotional urgency, from needing to feel productive, from fearing you'd miss out. Real traders know missing out on noise is winning. If you're serious about leveling up, build space into your process, space to pause, space to observe, space to wait. Your job isn't to trade every day. It's to survive every day until the trade worth taking appears. When it does, you'll know. Stillness sharpens your eye. It slows down your mind. It dials in your edge. Once you get addicted to waiting for quality, you'll never want to go back to noise. There's one more piece to this puzzle. Even with perfect patience, even with a crystal clear setup, even after waiting for days, one thing can still ruin it all. You. Not the impatient you, not the fearful you, the version that believes one strategy will change everything. That's when you meet the illusion that kills more traders than any market crash. The fantasy of more. You think you need more setups, more strategies, more indicators, more confirmations. Here's what's both brutal and freeing. You don't need more. You need to master one setup, one condition, one repeatable edge that you execute with such discipline, it becomes boring. Most traders fail not because they lack information, but because they crave stimulation. They chase novelty disguised as optimization. They jump from one idea to the next, collecting PDFs, watching webinars, building Frankensteins of conflicting systems until their charts are cluttered, their minds are numb, and their trades are gut reactions. The ones who win, the ones who last, they do the opposite. They simplify, they isolate, they find one clean, high-probability condition and they squeeze it like a monk grinding rice, again and again and again, until it's automatic, until it's unconscious, until it's boring. There was a trader at a prop firm I trained with. He had one setup, a failed breakout on 5-minute charts. That was it. He didn't care about news, didn't touch other time frames, didn't trade if it wasn't there. Some weeks he took no trades. Some days he took one and disappeared. His P and L, unshakable. His edge wasn't in variety. It was in precision. The irony is, the more boring your trading becomes, the more profitable it often gets. Boredom isn't bad. It's a sign of mastery. You've removed noise. You've cut the fat. You've stopped looking for excitement and started executing a plan. Ask yourself this. Can you name your best setup in one sentence? Could someone replicate it from your explanation? Could you trade it 100 times without tweaking anything? If the answer is no, you don't have an edge. You have exposure. Simplicity scales. It compounds. It gives you real data to refine. More importantly, it calms your nervous system. You're no longer chasing. You're waiting. You're watching for your moment. When it comes, you act. Not out of emotion, but out of routine. You don't need more trades. You need more clarity. You don't need more signals. You need more repetitions. You don't need more variety. You need more conviction. Every time you try something new without mastering something old, you reset your learning curve. You dilute your identity. You create chaos, and then wonder why results don't stick. The best in any field are known for one thing, one shot, one pattern, one domain they dominate. Why should trading be any different? Here's the paradox. Once you master one, you stop needing more. You don't even want more. You're no longer addicted to excitement. You're anchored in consistency. Even when you do everything right, even when your setup is clean, your size is right, your plan is solid, something inside can still sabotage it all. Not fear, not greed, something subtler, more dangerous. A voice inside that whispers, just this once, let it breathe, double down. Before you know it, you've broken your rules again. Not all sabotage is loud. Some of it sounds reasonable. Those are the voices we'll confront next. Section 12. The 3 sabotages you don't see. You've sized correctly. You've waited patiently. Your setup is perfect. You're ready. Just before you click, a whisper creeps in. Maybe increase your lot size, just this once. Or later, as price moves against you, let it breathe, widen the stop. It's not that bad. Just like that, your system is gone. Your edge collapses. Not from the market, but from inside your own mind. Sabotage in trading isn't always a dramatic emotional outburst. Sometimes it wears a calm voice, a logical tone. It doesn't yell, it negotiates. If you're not aware, you'll obey. There are 3 saboteurs every trader must face, not with discipline, but with deep awareness. The first is perfectionism. It tells you, wait for the perfect setup, so you hesitate. You wait for everything to align. Price action, volume, moving averages, moon phase. When the setup finally comes, you're paralyzed. It's never perfect enough. You don't pull the trigger. You watch the move unfold without you. Then you chase it. Late, angry, uncentered. The second is revenge. It tells you, make it back. Fast. You take a loss, small or large, and your brain flips. You're not trading anymore. You're swinging, punching shadows. You double your size. You ignore your rules. You lie to yourself. Just one win, and I'm even. You're not. You're spiraling. The market, ruthless and indifferent, shows no mercy for emotional debt. The third is fear masked as logic. It tells you it's not safe yet. Better not trade. It's lying. The setup is there. Your edge is flashing. Fear convinces you it's wisdom. So you pass, and pass again. Soon, you lose confidence. Not because of losses, but because of inaction. Worst of all, when you finally do trade, you overcompensate. You oversize. You force. The cycle starts over. These saboteurs live inside all of us. They don't care how long you've been trading. They don't care about your backtest, your mentor, or your funded account. They hide in the places you think you've healed. They wait for fatigue, for loneliness, for just one break in your focus. They're not evil. They're protective. That's the trick. They think they're keeping you safe from failure, from regret, from disappointment. What they actually do is prevent growth. They keep you in a loop, always circling, never mastering. How do you fight them? You don't. You expose them. You name them. You journal every time they speak. You recognize their patterns. You stop identifying with them. You make space between the voice and the click. Every moment you trade, you're not just managing capital, you're managing identity. You're choosing who's in charge, the trader who honors the process or the one who craves control. Mastering your sabotages isn't a strategy tweak. It's a psychological awakening. It's emotional sobriety. It's the quiet strength of saying no to your own noise. One that happens when the noise fades, the rules hold, and you begin to enter the trade. Not with hope or fear or force, but with stillness. That's when execution becomes art. That's when emotion transforms into precision. That's when the monster becomes the monk. Section 13, the alchemy of calm execution. Execution is supposed to be the easy part. You've done the analysis, the setup is there, the risk is defined. All that's left is to click. Yet that tiny movement of your finger, hovering over the mouse, can feel like standing on a cliff edge in a storm. Your body tightens, your heart rate spikes, doubt creeps in, you hesitate, you click late, or worse, you skip entirely. This is where most traders break, not in theory, in practice. The elite? They click differently, not with aggression, not with fear, with stillness. There's a trader I knew, former Navy SEAL turned full-time price action trader. He once told me, in combat, hesitation gets you killed. Reaction without breath? That's suicide. He taught me a ritual, one deep breath before every entry. Just one. Inhale, pause, exhale, then click. It sounded too simple until I tried it. Something changed, my heart rate stayed steady, my execution got cleaner. I stopped second-guessing, not because the setup was more valid, because I was more present. Calm execution is not emotionless execution. It's emotionally integrated execution. It means you've felt the fear, acknowledged the stakes, and chosen action anyway, with clarity, not compulsion. The market doesn't just test your strategy, it tests your nervous system. The flick of a candle can trigger old patterns. Trauma loops, dopamine addiction, avoidant behavior. That's why strategy alone isn't enough. You need breath work, visualization, somatic awareness, tools that regulate the body while you trade. Execution is a physical act, but it's born in emotional space. You can have the best setup in the world, but if your hand trembles when it's time to act, you don't have an edge, you have a theory. How do you train calm? Not by reading more, by repetition under pressure, trade in silence. Record yourself executing, measure your breath, not just your entries. Make execution a ritual, not a reaction. The calmest trader wins, not because they feel nothing, because they've trained their body to stay soft under stress. They've alchemized chaos into stillness. Here's the deeper secret. Calm execution builds trust, not in the market, in yourself. Every clean entry becomes a message to your subconscious. I trust my process more than I fear the outcome. That trust compounds. It's what allows you to sit out bad trades without FOMO, to hold through temporary drawdown without panic, to walk away when the market feels off. Not because you're scared, but because you're centered. Calm execution is the final filter. It's the difference between knowing the path and walking it. Even that isn't the end. There's one last mirror to face, one final edge to claim. It's not on the chart. It's not in your breath. It's in your pen. Until you write it down, you'll never truly see who you've been all along. Section 14. The Trader's Mirror, Journaling as a Weapon. The trade is done, win or loss. The chart is closed, the P and L is logged. Most traders stop here, they move on. Look for the next setup. Chase the next candle. The ones who grow, they do something different. They sit, they breathe, then they write. In trading, memory is a liar. Emotion distorts, victory inflates, loss shrinks. The journal sees everything. It doesn't care how you felt. It doesn't forget what you said. It reflects who you were with precision. Journaling isn't about keeping notes. It's about confronting patterns. It's about documenting truth in real time before your ego can rewrite the story. You think your setups are inconsistent? They're probably not. You are. Without a mirror, you'll never know where the distortion begins. I once journaled every trade for 90 days. Entry, exit, reasoning, size, emotion, before and after. Around day 38, I found it. 70% of my losses came after back-to-back wins. Not after failure, after success. I was high, confident, arrogant. I sized up unconsciously, chasing the same feeling again. The journal caught what my conscious mind refused to admit. That's the power. Journaling turns emotional chaos into visible pattern. It makes the invisible trackable. You see what time of day you lose control, what setups you sabotage, what beliefs emerge under pressure. It shows you not just what happened, but who showed up to the trade. Here's where it gets deeper. When you write consistently, your journal stops being a record and starts becoming a conversation, a mirror with memory, a map to your subconscious. You stop asking, why am I like this, and start seeing the answers in your own ink. Want to evolve as a trader? Don't just review your entries. Review your behavior, annotate your fear, log your greed, track your stories. Every hesitation, every rule you broke, every time you clicked too early or exited too late. Don't punish yourself, just witness. That's where the edge begins. The best part? Journaling sharpens intuition. Not because it gives you more data, but because it helps you notice sooner. You feel the same emotion rising, and you remember, last time I felt this, I blew the trade. Just like that, you pause, you breathe, you choose differently. In trading, improvement doesn't come from better setups. It comes from better self-awareness. Journaling gives you that awareness on demand. It closes the gap between who you are now and who you're becoming. Write it all. The truth, the mess, the patterns, the wins, the ugly. Be honest with the page in ways you can't be on the screen. One day, you'll open your old journal and realize you're not that trader anymore. You've outgrown the fear, the FOMO, the need to prove something. All that's left is clarity. When that happens, you'll realize this entire journey was never about mastering the market. It was about mastering you. If there's one thing all these reflections have pointed to, one blueprint that ties it all together, it's this: trade like a machine, think like a monk, and become the kind of person the market cannot break. Section 15, the blueprint. Trade like a machine, think like a monk. After all the mirrors, all the losses, all the breakthroughs, you're left with something startlingly simple, not easy, simple, a blueprint, not of strategies and entries, of who you must become to survive this game, to transcend it, to master it not through force, but through alignment. Trade like a machine. It sounds cold, mechanical, robotic. In trading, that's where freedom lives. The best trades are executed without hesitation, without emotional interference, without internal negotiation. They're triggered by rules, not hope, systems, not stories. When you trade like a machine, you remove, should I, from your vocabulary. There is no maybe. Only, does this meet criteria? Yes or no? Click or don't. This isn't dehumanization, it's discipline. It's creating sacred boundaries that protect you from your worst self. It's coding your rules so deeply into your process that you no longer ask your ego for permission to follow them. Mechanical execution alone is not enough. Machines don't adapt, they don't reflect. They don't learn from pain. That's where the second part enters. Think like a monk, not in robes, in presence, in patience, in detachment from outcome. A monk doesn't rush. He observes, he waits, he prepares in silence. In trading, thinking like a monk means cultivating inner stillness. It means knowing that a red trade doesn't define you and a green one doesn't redeem you. It means protecting your peace more fiercely than your profit. A monk sees the loss, feels the sting, and bows to the lesson, then moves forward, lighter, clearer, cleaner. The ultimate trader isn't some flashy genius making 10 grand a day. It's the one who can sit for 3 hours without trading and feel zero anxiety. The one who can take a stop loss, journal it, and sleep like a baby. The one who no longer needs the market to behave in order to feel okay. That trader has traded not just charts, but their identity. They've exited from self-sabotage, closed the position on needing to win, taken profit on every painful lesson and reinvested it into peace. That's what this blueprint gives you. Not a guaranteed system, a system of self. One setup, one identity, one breath before the click, one trade at a time, one moment of stillness between the noise. You don't become this version of yourself overnight. Now, you've seen the path. You've seen the traps. You've felt the weight of your own illusions. Maybe, just maybe, you're ready to drop them. This market is not just charts and money. It's a dojo, a teacher, a mirror that never lies. Now, you know how to walk through it. Trade like a machine. Think like a monk. When all else fails, wait. The version of you who waits, listens, adapts, and acts with calm, that trader doesn't need a win to feel worthy. They already are. You've just walked through the maze. 14 reflections, 14 truths, each one a candle held up to your habits, your fears, your forgotten potential. This wasn't just a breakdown of strategy. It was a mirror. Maybe, for the first time, you saw yourself clearly. You saw how price is a language of shadows, how indicators seduce and deceive, how support and resistance aren't just zones, but scars, how the market punishes ego and rewards presence, how wicks are trapdoors, volume, a whisper of power, fear, the real enemy, and risk, not as math, but identity. You learned the beauty of stillness, the miracle of mastery through repetition. The voices of sabotage that sound so rational, so gentle, yet sabotage everything. The power of breath before execution. The clarity that comes not from knowing more, but from journaling what's already true. Finally, you were handed the blueprint. Trade like a machine. Think like a monk. Become the kind of person the market cannot break. Now it's your turn. Comment below. I see the mirror if even one part of this cracked your old mindset. I'm done losing to myself if this is the moment everything shifts. Or share your biggest realization from this journey. Because transformation doesn't happen in the watching. It happens in the declaration, in the commitment. In the moment you stop hiding behind the screen and start facing what's real. The market is waiting. Not for another strategy, not for another indicator. For the version of you who's ready to stop fighting shadows and start trading truth. Your move.